How are you thinking about the year that was and the year that might be?
Well, good morning, Carol, and good morning,
Morning.
everybody. I'm basically thinking that looking forward to 2024 also being a good year. History tells us that great years traditionally are followed by good years, that gains in excess of 20% in one calendar year lead to double-digit gains in the second year, basically a 300 basis point improvement over the long-term average with a 10 percentage point increase in the frequency of advance. So basically, you letting your winners ride from one year to the next.
So every day we've got to come up with a new way to ask you whether you want to be long the Mag 7 relative to the breadth of there are 493 other stocks. So find another version of it. If you think you're going to get a double-digit return, the question is then, within Mag 7, they are expected to see their earnings growth rise by 22% next year. That's twice the S&P 500 advance. I mean, there's an irrevocability of having to have Mag 7 as a portion of your equity exposure. So is it still overexposed to Mag 7, or do you go for breadth?
I think you go for breadth, but what you do is you broaden out within those sectors that have done so well. Again, going back to 1990, if you were to be holding on to the three best performing sectors from an up year into the new year, you ended up beating the market 70% of the time. And the focus being that now you drift down into the second, maybe third tier level. So semiconductors having 105% improvement on a sub-industry level within the S&P 1500, you would stick with that group, but you might, instead of looking at NVIDIA, you might be looking at Broadcom, you might be looking at Marvell Technology, etc. So you stick with the winning sectors, but you might broaden out to the second and third tier companies.